So I think Yash, Mr. Yash has come, so we'll be able to take one by one. So once one question is over, then another person can raise a hand, and I will bring them on the screen. So we will go like that.
Uh, First of all, thank you both of one, and thank you Prakash for such a eventful session, and we get to know so much about the current scenario and how we are tackling it. So my question is to Kamath sir, sorry, Mohan sir. So, sir, as you said that the government has taken some proactive actions, and we are slowly but steadily we are coming out of the situation. So, my question is that is the stimulus given by the government, which is this 20 lakh crore, is that enough for the kind of situation we are in? And because what the economists like Raghuram Rajan and other economists have said that it is merely 1 to 2% of our GDP, whereas the other countries like Japan and Germany are spending in excess of 15 to 20% of their GDP. So while we are growing economy, so don't you think that the government can borrow more money from IMF and get give them more money into the hands of people so that spending will be increased and the economy will be revived quickly. Thank you, sir.
So, Dil Mange More, nothing wrong about it. Let me tell you, while yes, in order to address the issue and revive faster, we need to invest a lot. And we really need to invest, particularly in the areas like infrastructure, large manufacturing, etc., where you can create the employment, you can create the consumer surplus, as rightly said by Mr. Kamath. Unless there is a consumer surplus and there is a consumption, there is no point producing something. And in order to support that, the issue is that you will have to understand from the government's perspective that what is that they could really borrow to ensure that the sovereign credit rating is well protected. As it is, your deficit has gone from the intended 3 to 4% to 6 to 7%. And in the given situation, I mean, what Mr. Raghuram Rajan or any economist is asking is not wrong. But what could happen? What could government do? Probably we should respect the government's predicaments. At the same time, we should make sure that at least this 20 lakh crore is really put to proper implementation. As I told, under emergency line of credit for MSMEs, still 55% is only utilized. It means 45% is not utilized. So how do you really make sure that this 45% remaining benefit goes to the remaining MSMEs? What kind of tweaking is required? What kind of identification is required? I think that is more important to me. If I had consumed 20 lakh crore, probably I would have gone with you and Raghuram Rajan to get more money. But what is that I have consumed of 20 lakh crore? We are all sitting with still a liquidity of 6 lakh crore. If that liquidity is there, and if my banker colleagues are saying that there is no offtake, there is no demand, I think the issue is that instead of money, how do I create a demand? So as I said, the ecosystem, I will again reiterate, let us create an ecosystem whereby the investor world and the lending world have a confidence that yes, going forward, this is going to be a productive activity and my money will get service, I will be secured. That is how I would like to answer you.
Thank you so much, sir, for your insight.
I think just to add to that, that excess liquidity is reflecting in the stock market. The way it has gone back, not reached the pre-COVID levels, but yeah, quite risen sharply. And I think that is all because of the excess liquidity. Okay, next question. Surya Narayan sir, okay, Prabhakar is there, so let me bring him online.
Yeah, good morning. First of all, thank you to Telebu for organizing this event, and congratulations to all three of you for doing such a wonderful job. You've explained all the details very well. I thank you all for that. I have two questions actually. First question is about the NBFCs. You said NBFCs are excluded. So does it mean that the money raised by NBFCs by the banks from the banks is excluded, or the money lent by NBFCs to the consumers is excluded? My second question is, we have seen a lot of countries have transferred the money of the cash to the citizens to raise the demand, to raise the consumer demand. Why, and why it is not done in India?
Yeah, can I take up that?
Yeah, please.
Yeah, I mentioned in my earlier comments that the borrowings of NBFCs from the banking system cannot be restructured. That's the point I made. Whereas the lendings of NBFCs to the ultimate borrowers, their customers, NBFCs are subject to either they are bound to give either a moratorium earlier or now the one-time restructuring. They are bound to extend this facility. Therefore, on one hand, when they give moratorium, extend the period, give relief, etc., their cash inflow is affected. Whereas their payments, servicing from wherever they have borrowed, either from banks or from the capital market, needs to be serviced. Now, this predicament of the NBFCs need to be looked into is the point that I had made. With regard to the second part of your question, many other developed countries in the world have put more cash into the hands of the people with a view to generate demand. Yes, in our country also, the various schemes that we have announced early March, April, deals with similar schemes, either direct benefit transfer of 1,500 rupees to every eligible account, or some relief to the widows, so on and so forth, and free food scheme at the rate of 5 kgs of rice or wheat, and 1 kgs of dal or pulses, depending on where you are located. Initially, that scheme was for a limited period. Now it is extended up to November 2020. All these things is direct, indirect placing of cash in the hands of the poor, the truly needy people in the segment. Ultimately, the government has some constraint as to how much can be put in the hands of the poor. I, as an individual, would prefer more money to be put in the hands of individuals, so that there is a demand creation.
Yes, exactly.
But is it a demand creation for all segment of the economy? Is it for only essentials, or is it only can it create a demand for non-essentials, or what we call as discretionary spend? If you put money in the hands of the poor people at the bottom of the pyramid, they will spend it only on essentials. So it doesn't have any beneficial impact on the other segments in the economy. Therefore, what needs to be done, according to me, in addition to putting further cash in the hands of the poor and the people at the bottom of the pyramid, a couple of things which the government, in my humble view, should do is see whether a cut in GST is possible, in some certain segments, so that affordability can be, improved. Affordability of the user can be, improved, and at the same time, it can give some direct, limited, push to the demand. This is something which we need to look at.
Thank you.
Can
Thank
we
you,
also
Rubix.
look at a possible cut in the personal income tax at least? We have cut the taxes of corporates now to 20%, and in new cases to 15%, etc., etc. Can we at least for a limited period reduce the personal income tax slabs so that more liquidity remains in the hands of individuals. This will particularly help to create demand from the middle class, upper middle class, people. Should the government look at a very substantial infrastructure spend? If infrastructure spend is increased, all connected industries, whether it is cement, whether it is iron and steel, whether it is any other material, infrastructure and housing are two segments. If you give sector specific reliefs, and if the government increases spend in the infrastructure segment, this has got a ripple effect on various other connected industries, is something which the government should look at. And more importantly, if the government can expedite tax refunds, and if the government PSEs, public sector enterprises, can settle the outstanding bills, that itself is putting a huge amount of liquidity into the system. I think if some of these things, a combination of some of these measures are attempted, along with putting more cash in the hands of people at the bottom of the pyramid, I think the battle is largely won.
Thank you, sir. Thank you.
Yeah.
Excellent. I think at the end of the day, government has to do a balancing act. But yeah, I think you covered very clearly the points. I think the measures that government should take, which should definitely help.
Prabhakar, I hope your question is answered, at least partly.
Yeah, I'm very happy with your answer, sir.
Thank you.
I'm convinced.
Thank you.
Thank you. Okay, so the next question. Yes, Mr. Surya Narayana.
No. Sir, because of this COVID situation and because of this restructuring of loans, what will be the profitability of public sector and private sector banks in the near future, sir?
What will be the
profitability and balance sheet performance of public sector and private sector bank, total banking sector,
sir?
I think he had put that on the chart also, that people who have invested in the banks, in the banking sector, the shares of banks, what should they do? How will the price?
I will not comment anything about the share value of banks. That is not a topic which needs to be discussed, and that is not actually very relevant to today's scenario. In any case, banks are not receiving the value that they deserve in the capital market. We have all seen the banking stocks are taking a beating for whatever reason. Generally speaking, particularly public sector banks, and some of the private sector banks also. Now, how does the whole restructuring affects the banking system? One, the possible impact of COVID, which would have led to accounts slipping into NPA. Now today it is partly, at least partly stopped. Eligible accounts will get restructured. They will not slip into NPA. They need not be classified as NPA, and banks need not provide to those accounts. Is something which is protecting the credit quality of banks loan portfolio, and therefore they will continue to earn interest, and banks income flows will continue. This is the second point. The third point is, if the account slips into NPA, banks have to provide, depending on the age of NPA, which means that in addition to loss of income, it is a drain on their capital. So because the accounts are now protected and will continue to be in standard category, capital requirement of banks will, come down. Let me, for your benefit, also add, there was a credit rating agency report. I am not naming the agency; it is not proper, which said that the gross slippages, according to their original estimate before this scheme was announced, in the banking industry would be of the order of 5 to 5.5%, and it said, as against 8.5% of gross NPA in the banking system as on 31st March, 2020. By the end of March 2021, gross NPAs of the banks would be in the range of 11.3 to 11.6%. Now the same agency has revised it downwards, and it says the gross NPAs of the banking industry will be anywhere between 9.8% to 10.3%. Similarly, the capital requirements of banks, which is estimated earlier in the public sector to be of the order of 46,000 crores to 82,000 crores, it today revised estimate is only 25,000 crores to 48,000 crores. So this scheme has a beneficial impact on the banking industry as a whole. How will the share prices behave? I have no idea.
No, sir. I didn't ask about the share price, sir. Only
Mr. Prakash was mentioning that some
I,
individuals
I,
are
I
investing.
read your chat message where said the stakeholders in the
Okay,
bank, how
okay,
will
yes.
they
okay,
impact, but maybe I misread.
okay,
So,
okay,
uh,
okay, okay.
I
Okay,
hope
to that
I hope
extent, I stand corrected. Yeah,
Yes. Thank you, sir. Thank you very much, sir.
yeah.
I think we have time for one more question, one or two max.
You have grossly overrun your time.
Yeah,
Prakash, one last question.
yeah. Let's take one last question. Whoever wants to go, or I'll take something from the chat. Somebody has put on the chat, which is I think quite valid, though not related to our topic. But I'll just read it out. Mr. Shaukat has raised. As mentioned by Kamath sir, agriculture sector has contributed 3% positive result during pandemic to our GDP. Now, new agricultural bill 2020 will impact any changes on our economy. I think that is the latest thing about the new agriculture bill.
Yeah. What I actually mentioned is that Q1, while all other segments have registered a negative growth, agriculture has registered a positive growth of 3.4%. Whether it will have a beneficial impact on GDP, one has to keep two things in mind. One is the share of agriculture to GDP is only about 15 to 16%, as we discussed today. And the coming crop, if it is a bumper crop, again agriculture sector will register a positive growth. Given the fact that the land under cultivation has gone up, given the fact that in most parts of the country till about a month or so back was having adequate monsoon. It's only during the last few weeks we are seeing floods in different parts of the country, and we do not know the extent of the loss which the agriculture has suffered as a result of heavy rains and floods. The whole result of agriculture sector contribution in the coming quarters will depend on this. Well, with regard to the reforms, whether it is in the APMC related act or whether it is in the Essential Commodities Act, my personal view is that it is well intended. It will, while the government is maintaining its stand that the minimum support prices for various commodities will continue to exist. In fact, just 2-3 days back, they have increased the MSP for this current season for different agricultural produce. And if MSP continues, then the farmer will have a choice whether to go through the government procurement route, or whether to go through the agricultural produce market route, that is the APMC committee yards, or whether to go to the open market and sell the produce to the private entities if a better price realization is possible. If the farmer ultimately has got all these options open to him, I think overall the new acts, reforms which have been brought in by the government, which is now seeing some protests across different parts of the country. If all these options are available to the farmer, according to me, I feel it is beneficial overall. But one has to wait and watch, as Mohan mentioned, how the implementation of the reforms take place. Number one. Number two, the interest of the farmers need to be protected. He should realize reasonable returns, reasonable price for the produce that he grows. And all of us have together a responsibility to protect the interest of the Annadata. He is the Annadata of the country, and we have a responsibility to ensure that he doesn't get into any kind of debt trap. And I'm sure banking industry as a whole is up to the task as far as agricultural lending is concerned. I think on the agricultural reforms front, I feel it is early days yet to come to any conclusion. As things stand today, as per the information that is available in the public domain, I feel that these reforms will stand to the benefit of the farmers if it is properly implemented. This is my take.
Yeah,
I would just like to supplement Prakash what Kamath sir said.
Yeah.
Say today in the country, the post-harvest credit is not more than 10% of the pre-harvest credit. If I look at the pre-harvest credit, which is of the order of 12 lakh crores to 14 lakh crore, the post-harvest credit is minuscule because the farmers had no opportunity to hold back and had to be sell the produce, as Mr. Kamath said, as per the laws which was there. Now, this will support the creation of the warehouses, which are said in the earlier thing that 1 lakh crore support, which is given for creating agri infra, will help a lot towards warehouse creation, warehouse financing. I'm personally privy to a lot of developments which are happening on the warehouse financing using technology. Warehouses being created on site, flexible warehouses being created on site. Various startups are working on this area where what will happen, the farmers will be able to realize their funds in good time by warehousing, repay the crop loan, take the another crop loan, and they can sell the produce at the appropriate time to realize the benefits out of it. It means they will have more surplus at their hand. I think it should go a positive going forward. That's all from my end. I think we should now say thanks to our audience for their patience for almost 2 hours with all the technology breaks.
Yeah, some amount we can contribute to the technology break, but I think still, yeah, it is, we have overshot our time. But I think it was a spellbinding session, so I felt like we should keep on continuing another couple of hours. But I think my team has given me only 90 minutes, and that also I have overstayed. But I think it was a really enriching session, Mr. Mohan sir and Mr. Kamath sir. Thanks a lot. Thank you very much for taking time out from your busy schedule. It has been an honor to be among distinguished individuals like you, and a great sincere thanks to all the participants and guests for joining this session, which was made possible through our own platform, the Telebu Join. And one more just end message to the participants also. Please try our communication platforms on www.telebu.com, and you can avail your free trials of different products that we have. And yeah, last but not the least, I would like to thank all the colleagues from my Telebu team, the technical team, marketing team, and everybody else for organizing this event and doing all the coordination. Thanks to everybody. Thanks and see you soon again.
Thank you,
Thanks
Mr.
all
Prakash.
participants. Thank you. Thank you,
Thank
Kamath.
you.
Thank you,
Thank
Prakash.
you. Thank you. Please, all of you, please stay safe, stay healthy. Thank you. All the best.
Thank
God
you.
Thank
bless.
Thank
you,
you. All
all
the
the
best,
participants.
everybody. All the best.